The IMF says that the US tariffs will push global public debt above pandemic-era levels, nearly 100% of global GDP. US President Donald Trump says no plans to fire Fed Chairman Powell, but wants to lower rates. And Apple and Meta fined as EU presses ahead with tech probes. And welcome to the Economic Bulletin. We start off with the International Monetary Fund, as it has stated that economic pressures from steep new US tariffs will push global public debt above pandemic-era levels to nearly 100% of global GDP by the end of the decade, as slower growth and trade strain the government budget. The IMF's latest fiscal monitor projected that global public debt will grow to 95.1% of global GDP in 2025 and to 99.6% of global GDP by 2030. Governments' annual fiscal deficits are forecast to average a 5.1% of GDP in 2025 compared to a 5% in 2024. And a 3.7% in 2022 and 9.5% in 2020. The IMF further highlighted that major tariff announcements by the US, countermeasures by other countries, and policy uncertainty are worsening prospects and heightened risks. IMF Managing Director Kristalina Georgieva has emphasized the need for the fund to take a more active role in debt restructuring, particularly for vulnerable low and middle income countries. African leaders expressed the need for greater technical assistance as they face rising debt challenges. The Global Sovereign Debt Roundtable has approved a new playbook to aid countries in navigating debt restructuring, with a document set to be released after a closed-door meeting in Washington. Georgieva and Hervé Ndoba, chair of the African Caucus, warned that Africa risks further economic shocks, with growth revised down to 3.9% for 2025. They stressed the importance of macroeconomic stability and domestic reforms to enhance fiscal sustainability. And in response to the significant cuts in development aid from Europe and the United States, think tanks and advocacy groups are calling on the World Bank to adjust its lending policies. They propose lowering the equity to lending ratio of the International Bank for Reconstruction and Development from an 18% to 17%. This change could unlock an additional $30 to $40 billion in lending capacity without impacting taxpayers or shareholders. Since President Trump took office for a second term, his administration has cut billions in foreign assistance, and European governments have followed suit. The UK government has borrowed almost £15 billion more than expected during the last fiscal year. The Office for National Statistics released data showing that the shortfall between government income and spending was £151.9 billion in the 12 months to March, overshooting the £137.3 billion forecast just a month ago by the Office for Budget Responsibility by over 10%. It was also £20.7 billion more than in the same 12-month period a year earlier, and the third highest level of borrowing on record for a full fiscal year. The Bank of Japan has stated that Japanese banks must monitor various risks associated with high levels of uncertainty over global trade policies. In a semi-annual report, the BOJ highlighted that Japan's financial system has been maintaining stability on the whole. However, financial institutions need to be vigilant against the materialization of various risks. It noted that the prices of stock holdings could swing while the potential for defaults at their client firms could increase. The report also pointed out Japanese banks' growing exposure to foreign non-banks through investment trusts and loans to private equity and debt funds, while overseas hedge funds are also stepping up investments in Japanese stocks and bonds.
Donald John Trump, do solemnly swear that I will faithfully take office of President of the United States.
Capital open, the Americans and reciprocity.
Mexico, Canada,
Greenland.
I'm also, and I don't.
The Wall Street Journal has reported that the United States will aim for Britain to reduce its automotive tariff from 10% to 2.5%, as British Finance Minister Rachel Reeves is due to meet Treasury Secretary Scott Bessent this week. Washington is preparing its terms for negotiations, aiming for London to reduce levies and other non-tariff barriers on a variety of goods. The Trump administration also aims to push for more relaxed rules on U.S. agricultural imports, including beef. However, it remains unclear if the U.S. will consider reducing its 10% tariff on Britain if London agrees to all of its trade demands. The United States has said it is doing well in its discussions about a potential trade deal with China. White House Press Secretary Caroline Leavitt told reporters that she had spoken with the president before the briefing, and he wanted her to convey that the United States is doing very well regarding a potential trade deal with China. Leavitt also said the Trump administration has received trade deal proposals from 18 nations, while officials, including U.S. Commerce Secretary Howard Lutnick, are meeting this week with representatives from 24 countries to discuss trade.
Meeting with 34 countries this week alone. We are moving at Trump speed to ensure these deals are made on behalf of the American workers.
U.S. President Donald Trump has said he won't play hardball with China on trade and that the U.S. tariffs on China will be nowhere near the 145% his administration had previously discussed. Trump expressed optimism that he would make progress with China that would substantially lower tariffs on their imports, but also warned that if they don't make a deal, they'll set the deal. Trump said a deal would result in substantially lower tariffs on Chinese goods. When asked about the current rates, Trump responded that it won't be that high and won't be anywhere near that.
Scott and Howard and myself and others, we're going to be setting the deal, and it'll be a fair deal for everybody.
China has said the U.S. should stop making threats and resorting to coercion if it wants to make a deal on tariffs. Ministry spokesperson accused the U.S. of continuing to exert extreme pressure, even as it attempted to reach an agreement, stating that this was not the right way to engage with China. He described the approach as a typical act of unilateralism, protectionism, and economic bullying, calling it unpopular, unsustainable, and increasingly opposed by a growing number of countries. And on another note, the U.S. President Donald Trump has said he has no plans to fire Federal Reserve Chairman Jeremy Powell, but said he wants interest rates to be lower. Trump told reporters in the Oval Office that he has no intention of firing him. He added that he would like to see him be a little more active in pursuing ideas to lower interest rates. The comment represents a dramatic shift for Trump, who has recently ramped up his rhetoric against Powell and declined to rule out the possibility of taking the unprecedented step of firing him.
Economic advisor Kevin Hassett.
None whatsoever. Never did. The press runs away with things.
With U.S. President Donald Trump's statements regarding the U.S. economy and Fed Chair Jeremy Powell, let's take a look at the economic powers of the U.S. president, including what is within his authority and what is not. And joining us from Florida is the Executive Director of the Global Foreign Policy Center of Washington, Justin Thomas Russell, to discuss Trump's latest statements and their impact on the economy. Welcome, sir, to Qnews Economic Bulletin. And let me start off by asking you, sir, President Trump says U.S. tariffs on China will be nowhere near the 145%. How do you interpret this apparent shift in tone?
Well, I think that Donald Trump blinked. He was getting a bad reaction from Wall Street. He was getting not the reaction he expected out of the Fed chair, Jerome Powell. And it was hitting his polling numbers, and it was quite frankly hitting the wallets of those who elected him. All this entails a huge, increase in inflation, which is something that he campaigned that he was going to reduce. It wasn't working. And quite frankly, I think he's starting to realize that trying to make a deal over tariffs on your biggest economic trading partner just doesn't make sense. So I think he's starting to realize the reality of this is not a simple task of just throwing tariff numbers at 145%. And as a result, China wins in this.
He also hinted, sir, at a potential deal with China that would lead to a substantially lower tariffs. And how realistic is that outcome, do you think?
Donald Trump right now is trying to make it look like that he's got control of this, that he's in the driver's seat of making this deal, this tariff deal. The reality is China called his bluff. President Xi and President Xi's economics team basically have said, you know what? You call us when you're ready to really deal. The reports coming out of Washington where Donald Trump had made a reach out to President Xi. President Xi said, nah, we're not ready to talk. We're not calling you. I think it's a test of wills right now. The reality that we're dealing with right now is the fact that any deal that is made is going to have to take into consideration that Donald Trump initiated this tariff war, he initiated this trade war, and that he's going to have to give up a little bit more than Beijing in this instance. It was very badly played, and President Trump was given bad economic advice by a couple of his advisors.
So how do you think might these mixed messages affect investor confidence and market stability?
Well, there are several factors. We thought that the tariffs, which had, the tariff reduction or the tariff implementation on what he called, Independence Day on April 2nd, the reality is that those tariffs took away $11 trillion of economic market capital in the stock markets here in the United States. And it had a global effect of maybe double or triple that in the global markets. What we're going to see, though, is that as his rhetoric changes, at first he was talking about removing Jerome Powell. Well, he can't do that. But what everybody knows is the economic markets trust Jerome Powell. He talked about, holding hard on tariffs. He's already started backing away on this. Yep. The big question is, as his rhetoric changes, is the market going to believe him? He doesn't have a lot of street credibility or a lot of built up goodwill with the markets. His shoot first, ask questions later approach to the global economics is not working out.
Well, that's the thing, sir, exactly. So Trump claims that if China doesn't agree to a deal, they will set the deal. What leverage does the U.S. really hold in this phase of the trade dispute?
Well, the leverage is the same that the U.S. always has. Our center is about to release a report based on the idea of mutually assured economic destruction. China cannot get into a prolonged war with us as the United States because we buy a lot of their manufactured goods and we do it in a just-in-time logistics system. As a result, the U.S. has the one advantage of, if you want to get into a trade war, we just won't buy your stuff. We'll go to Brazil, we'll go to Malaysia, and we'll let you sit on your stuff. That's going to hit President Xi. It's going to hit his economy.
Okay.
And he's just now recovering out of a downturn. I don't think he wants to risk that. So that's the only leverage that Washington has with
Washington
Beijing.
holds. Well, sir, given the global growth downgrades tied to the U.S. trade policy, do you think Trump, his approach can be justified as being economically sound?
Yeah. In my opinion, no. There's nothing economically sound about the way that he rolled out his tariff matrix back on April 2nd. The idea of forcibly removing the Fed chair, Jerome
That's actually
Powell.
my next question.
Yeah, I mean, it's not a sound. None of the economic moves that he's done so far in his first 100 days have made sense at all.
And actually saying that he won't fire Fed Chair Jeremy Powell, and then he only wants lower interest rates, and then again, no. So what does this really suggest about the respect for the Fed independence?
Well, there's two sides to that question.
Okay.
And that's a very good question.
Thank you.
The independence that the Fed chair has and that the Federal Reserve Bank has as far as dictating economic policy is guaranteed. It's very resolute. The idea of the chairman of the Federal Reserve Bank, Jerome Powell, is apolitical. His job is to reduce and maintain good economic stability inside the federal banking markets, keep the dollar high, et cetera. Jerome Powell is not going anywhere, and I don't think Congress is going to let him go anywhere. And I think Donald Trump, as we've seen over the past 72 hours, he started to come back at a time where he's saying, look, I want him gone. If I want him gone, he'll be gone. He has toned back that rhetoric because the markets don't like the idea of making the Federal Reserve Bank or the chairman political in nature, and his politicalization of Jerome Powell backfired.
And sir, taking a step back now, do these moves, the tariffs, pressure on the Fed, the support, or contradict the idea of actually making America great again, do you think?
Yeah.
What's your insight?
Wow. Look, if you're asking me, I'm a little biased. America has always been great.
Okay.
The idea of making America great again to me has always been, and this is just my individual opinion, the idea of making America great again is quite frankly idiotic. America's always been great. That is why we are the largest economy in the world. That is why we have the standing in the global community that we do. Does it waver sometimes? Does it go from bad to good, a little bit worse? Yeah, that's always going to happen. That's been the history of our country for 250 years. When you ask the question, does Trump's America First policy make America great again? Quite frankly, I think it doesn't hurt, but it definitely does not help the situation. It's kind of at best.
Well, thank you so much, sir, from Florida. That was the Executive Director of the Global Foreign Policy Center of Washington, Justin Thomas Russell. Thank you so much, sir, for your insights and for joining us today. And on the tech front, European Union antitrust regulators have handed out the first sanctions under landmark legislation aimed at curbing the power of big tech. Apple was fined 500 million euros and Meta 200 million euros. The EU fines could stoke tensions with US President Donald Trump, who has threatened to levy tariffs against countries that penalize US companies. The sanctions follow a year-long investigation by the European Commission, the EU executive, into whether the companies comply with the Digital Markets Act that seeks to allow smaller rivals into markets dominated by big tech. Alphabet's Google and Elon Musk's X are also facing potential fines from European regulators. And in response, Apple and Meta have criticized the EU decision in an email statement, where Apple highlighted that announcements are yet another example of the European Commission unfairly targeting Apple in a series of decisions that are bad for the privacy and security of users and bad for products and forced to give away Apple's technology for free. Meanwhile, Meta stated that the European Commission is attempting to handicap successful American and European companies to operate under different standards. And Tesla's CFO, Vaibhav Taneja, has highlighted concerns over India's 100% import tariffs on cars, which are causing anxiety among potential customers. Despite wanting to enter the world's third largest car market, these tariffs, described by CEO Elon Musk as among the highest globally, remain a significant barrier. Taneja stated that people feel they are paying too much for the car, and that's why the company has been careful about the right time to enter India. He acknowledged that India is a very hot market. And oil prices fell almost 2% as sources said the OPEC Plus could accelerate its output increase next month, but losses were curbed after a report that the U.S. President Donald Trump may cut tariffs on Chinese imports. Brent crude futures were down 1.69% at $66.30, while the U.S. West Texas Intermediate crude lost 1.84% to $62.50. Brent had traded at $68.65 a barrel earlier in the session, its highest since April 4th. Gold on Wednesday extended its retreat from an all-time high as appetite for riskier assets improved after President Donald Trump said he has no plans to fire the U.S. central bank chief and also signaled progress with China on the tariff front. Spot gold slipped 2.2% at $3,305.79 an ounce after hitting a record high of $3,500.05 in the previous session. U.S. gold futures dropped 2.9% to $3,320.40. U.S. President Donald Trump has stated that the crypto industry needs regulatory uncertainty and clear rules of the road that Securities and Exchange Commission Chairman Paul Atkins will work on providing. Atkins emphasized that his top priority will be to have a firm foundation for digital assets and keep politics out of securities laws.
The SEC to end its waywardness and return to its core mission that Congress set for it: investor protection, fair, orderly, and efficient markets, and capital formation. I will work to protect investors from fraud, keep politics out of how our securities laws and regulations are applied, and advance clear rules of the road that encourage investment in our economy to the benefit of Americans. A top priority of my chairmanship will be to provide a firm regulatory foundation for digital assets through a rational, coherent, and principled approach. We will work to ensure that the United States is the best and most secure place in the world to invest and to do business.
In markets, the U.S. stocks are leaping Wednesday as a worldwide rally comes back around to Wall Street, following updates from President Donald Trump about his plans for the Federal Reserve and his trade war that investors found encouraging. In the U.S., the Dow Jones Industrial Average rose a 1.62%, the S&P 500 gained a 2.7%, and the Nasdaq Composite climbed 2.05%. In Europe, UK's FTSE 100 increased an 0.89%, Germany's DAX hiked to 3%, and France's CAC 40 jumped to a 2.18%. In Asia, Japan's Nikkei 225 rose a 1.89%, and Hong Kong's Hang Seng Index futures hiked a 2.37%. And that brings us to the end of our economic bulletin, and here's what we've been covering. The IMF says that the U.S. tariffs will push global public debt above pandemic-era levels, nearly 100% of global GDP. U.S. President Donald Trump says no plans to fire Fed Chairman Powell, but wants to lower rates. And Apple and Meta fined as EU presses ahead with tech probes. And this concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. And thank you for watching, and stay tuned for more updates on Q News.